Good morning, friends. Welcome back. Hope you're all doing great. Hope you had fun today. It was kind of wild. So let's take a peeky poo at what happened. I did a little bit of freestyling today. Wasn't completely obvious to me. We did some things that I didn't want to see overnight. Didn't exactly scream high probability this morning. And didn't really do much, really. So this was the price point in which I was seeking a bottom for today's candle, but not this candle. If you remember, we were using midnight. Oh, I'm in the micros for some reason. Hold up. There we go. So we were going to use midnight as our open. So we had to imagine that this was the open of the actual candlestick. Therefore, we're drawing out our very own custom daily candlestick, just like we did yesterday. And if you remember, I wanted to see price come and touch one of these levels inside the wick annotated the other night. And today's bottom being right here in London session between 1 and 5 a.m. expected. If London is to make the high or the low of the day, it will be in between that time. This run out of the range, making a higher high. Bull flag here. 8:30 a.m. news driver dropping back down into the higher time frame discount array, rejection block. Seeing sensitivity creates a bullish order block here, but it uses consequent encroachment of the rejection block and then snaps it into buy side liquidity. So some conditions for me for being high probability would have been, remember how I was saying, if London just pokes that high just ever so gently, I would want to see it trade right back down. So that was checkpoint 1. We got that. Then I would want to see price action dangle around in here a little bit. And then for 8:30 a.m. news driver, poke that double top here, run down here, and then snap up. So this is my cat's arse of profiles that I look for on a daily basis, right? If I'm bullish or bearish, doesn't matter. Just this overall structure. And that didn't happen. So when it came out of this range, it's not exactly screaming to me, hey, let's just hop into New York session and start putting up a ton of risk. So I did take a few trades in here. I took a long here, came back on me. I took a short here. Both took partials, came back on me, and I took another long and shut it down here, and then it did absolutely nothing. So that recording is in the Discord. If you are a member, just scroll up a little bit. You can check it out. And when I was with you guys this afternoon, I was looking for kind of gun to my head. If price was to want to move anywhere out of that range, go down some and come into this specific wick here. And we came down for the lower quadrant there. Just poked it a little bit. Bullish order block, trades back above the upper quadrant here, and then poking in buys like internal buy side. You know there's some there. You know people are chasing at the end of the day. You know it. And so that profile is garbage. I don't like it at all. Not a big fan. It's not like this one where it opens, it drops down, makes the thing, and then goes up. This one went, well, it did it in London, but it just went up. You know, That right there would have been the ticket. A little accumulation range here, drop down, run up. But I'll be real with you, when I'm framing low probability New York conditions, I don't want to see London do this. So even though New York was kind of anticipated and doesn't look too bad if we do that, now it looks decent, right? Did it really do much? No, not really. Sure, it had this kind of nice run up here for 45 minutes, but then it did diddly squat. All foretold by London's range and Asia, really. I told you guys last night before midnight. Asia doing things, and look at it. Ugh. In-N-Out Burger. So, now what? Well, we have made TGIF requirements. So, tomorrow's kind of a wild burger. If we do take this high, it's a bull trap. So just as I showed you with the red line just before, I would like to see price just wiggle and do nothing. Maybe New York starts running up, maybe London starts running up, but I want to see a pullback. So I'm going to be really, really picky with what I engage with tomorrow. Just like today, it's got to show its hand, it's got to show a model, it's got to show a confirmation model, and then I might decide to get in. So even though to an untrained eye, the executions might not look too phenomenal as far as, oh, you didn't catch the bottom or the top. No, I got in sync with order flow, and that's the magic. So it'll be like that tomorrow too. It's got to be completely obvious. So what would that look like? Well, I would like Asia to just kind of do diddly squat. That would be sweet. We've already made this one. This is Oh yeah, and 24,423 and a quarter was acquired, and then we switched contracts, so now we're at 24,713. So we're gonna have to adjust where I was giving targets for the beginning of the week here, from the beginning of the week. So that was one here, and it was the second deviation. So that is target acquired. And then we got one from the monthly chart that was a little bit higher. They don't line up perfect now. That's better. I'm just gonna front run it just a little bit. Those two are bang on, pretty much. If you don't know what I'm doing, don't worry about it. If you studied hard, you know exactly what I'm doing. And you'll immediately tell yourself, okay, no, these candles are old. This is a different contract. That's not how it works. Just trust me, bro. It's going to be a good time. I like this much better. Right there. Nice. Okay. So next two levels, like we got to aim for something, you know, and to the student that was messaging me and said, like, I don't see that how this could possibly go any higher. That's exactly why it went higher. That's the lesson. Okay, your retail brain said, oh no, it's too high, it's too expensive, recession, Trump, blah blah blah, whatever. You'll put whatever you want behind whatever you want to justify and give yourself a bias. And I'll give you a little tip. Okay, look, go to the all-time history, not that one, NQ1 here. Okay, just do yourself a favor and come to this chart. And go look at and take a look at all the other knuckleheads who said the top was in. You don't need to know who they are. Okay? You just need to know that every time it traded down, there was a handful of knuckleheads that said it was over. And it never was. Ever. And it just keeps flailing out of control. So you got to get on board with hanging on for dear life. You just wait for a dip, you find your model, hang on. You're not going to win every day. That's why you have a daily loss limit, right? This is my favorite contract out of them, so I'm really looking forward to some shenanigans going on here. Hey, this is the weekly candle. If it wants to get squirrely, it can keep going. It doesn't have to. And that's what I'm going to go on next here. It doesn't actually have to like start accelerating way up there yet. But when I was given September targets at the beginning of the week, those have been achieved. So we got to pick other points now to choose from. Just looking at this now too, I want to see what this does. Oof, I love it. Let's go. Okay, so Friday, if it pokes that high, I'm aiming for it. But that doesn't mean I want it to accelerate past it. And how much it does, that's where I'm going to be looking to short. And you'll be like, oh, but it's pumping. Why would you be looking for a short? Because it's Friday. And it's the end of the week. And that weekly candle has to make a wick. And just like this daily candle had to make a wick because it traded up and then back down, this same weekly candlestick needs to make a wick. So in my opinion, and I could be offside here, but the highest probability tomorrow would be a short. Now you can catch a long. That's not to say you won't find something obvious that goes up and you'll be like, oh, sweet. That's a sweet long. But yes, okay, if you take your long and you've collapsed the position in profit, then you sit on the side. You go and peacock around the house and enjoy your life. Don't go and ruin your weekend. All right, so what that would look like would be, well, this is a really good range to work in. So we do have relative equal lows below the market. We've got the high of this accumulation range above the market. So if Asia can just kind of wiggle its way on up just slightly, but then flatline. Okay, maybe it takes that high, but it doesn't take that one quite yet. And then midnight opens, trades down a little bit, then comes up. And this is the first spot I'm looking for a high in London. If it comes up, just like yesterday, how it just traded down ever so slightly and then started ripping up. So if it does that, wherever it does this market structure shift here, when it changes trend, this can be in London or New York. Dang it. Yeah, that's good. If it happens in London, I'm going to be really weary of New York session, okay? So that trend change there, this is what I'm looking for, is this retracement back up into here. It can be a fair value gap, it can be a breaker, or both. And then wherever price action makes the high tomorrow, I'm anchoring to the lowest point of the week. And this is where I'd like to see a bottom. Now that depends on where we make a high. So this high obviously could change if it goes higher. Okay, so after a significant buy-side liquidity pool is rated, you can also find your, it doesn't matter what model you're playing, as long as you're counter trading that initial move. If it's going up at, let's say, 9:30 a.m. and it takes the pool of liquidity and it takes it viciously, okay, that initial move is going to be quite spooky, and especially if you're trying to long it. And once it takes that swing low, it's shifting market structure. Typically, it can also come all the way back up and take that high. But there's a model in here for you. It can be a bear flag, it can be an inverted head and shoulder, descending triangle, all sorts of things. But it's going to be high probability in this time. Okay, just like this flamingo friggin' goofy looking thing. I don't even know what to call it, but your inverted head and shoulders, they are the reversal models, and they're really, really dominant after they dip. Or rip in this case. So I'm trying to find the high of the week, and just be warned, because of the environment that we are currently in, and also because Thursday has met the, thank God it's Friday, model retracement, we can get some goofy thing where we do this. For New York, like right out of London into New York, and then just literally flatline and die there. So rip up here by 11 a.m. tomorrow, and then just do this. And that's what I call max pain right there. Yeah, nobody gets out of chop. That's where your daily loss limit comes into play. Because if it decides it doesn't want to run you guys, that's just it. It ain't gonna. And 11 a.m. is a pretty good cutoff time. And if you miss the move, so be it. So many things that can happen tomorrow. So gun to my head, I say we make a new high and then we trade down to at least 20% retracement. So I'll be on the lookout. If London lunch does something, meaning it's trending between 5 and 7 a.m., the chances of me doing anything for New York session is 0. So as much as I want to do stuff, it's got to be the right environment. And this pullback here was kind of annoying. That's kind of threw things off. And now there's multiple things that can happen here on Friday. It's just the way it is. What's up, everybody? Hey, happy Thursday. I hope you're all having a safe, great trading week. And we got some information that we wanted to see. We are likely going to lose control. And I don't know, I'm a happy camper. Like, this is, so if you guys remember, like August and like this last little bit, the information that I wanted out of these last few candles came out of the 3-month chart. And if you know what you're looking at, you're probably looking at this and you're going, how did I ever miss this in my entire life? Yeah, I know how you feel. When I first figured it out, I was like, wow. Hey, you guys want to know where price is going? Just come here. Just come here. And with now your new abilities on how to read these values up here, the open, low, high, close, and also the values down here, time, in concert with the price scale. Okay, you guys know how these three things operate now. Your 3-month chart. I was having a likey asking me, how do you get your bias? The big time frames. And that's a swing low. That's a discount. That means we go up. And I mean, I don't make the rules, but you see, it's very hard to improve on perfection. God bless you guys. Look forward to Christmas time because it should be really sweet. Thank you for joining, and we will see you tomorrow. Peace.